All right, let me say hello, everyone. Doug here with the LincolnList.com. Let me welcome you to another weekly edition of Stock Market Mutterings, where my commitment to you is to take a grope in the murkiness right here, try to make some sense out of this market for you, and I really do hope, that whatever I talk about today can put some money in your pocket or help make you a better trader. Now, for you guys out there that want to take your trading to the next level, as I always say, every day the market is open, I'm live streaming right here from my office. I'm trading right here on screen. So if you want that personal attention to detail and you're ready to take that next step in your trading career, somewhere on this screen will appear a link. Feel free to join us any day the market's open. So we'll begin, as always, with the SPY. I'll give you my market view and opinion. Am I right? I don't know, but we're going to talk about it. Now, if you go back to last week where we left off on Friday, we had this big sell-off. And I'm just using the words big here because, for lack of a better, because I don't know what else to say about it. But we saw some big reversals in stocks that we haven't quite seen lately, such as we saw like $20, $40 reversals in things like Nvidia and Netflix. And it kind of left this week off thinking, okay, maybe we're going to gap down Monday and start correcting. Now, the consensus overall is that people keep comparing this correction to the 2008 correction. And what we saw back in 2008 was this huge sell-off first, followed by like a 40 to 50% rally. Don't quote me to the penny there on the details. We saw this massive rally, very similar to what we see right now. Then the market sells off again, taking out the previous lows and really just washing everything down to what is probably going to be a generational low. Now, a lot of people think it still has, that's the way this market has to operate. It still has to perform like 2008. That's how all corrections are supposed to work. And that's not the case. And what happened in the past doesn't mean that's going to happen now and in the future. And what we're seeing now, we're talking about well past a decade since that happened. There's much more variables, much more algos, much different circumstances surrounding this market than that market and the way things operate. And I also think because this correction is still fresh in a lot of people's mind, the original correction that we saw in March and April, that every time you get some red bars or you start to see aggressive selling or flushes, that everyone thinks, okay, this is the beginning of the end here, we're just doomed. And still, that's not the case. Now, we talked about last week that every day we saw something like that, but the market got bought back up. This week, we gap right above resistance, and it's getting that selling all the time, but it keeps getting bought up. The correction that we're thinking maybe is coming in the Qs with the techs hasn't come. We've seen Netflix maybe didn't impress with their earnings considering how much the stock has run up. Didn't do anything to the Qs. I mean, we still it's just business as usual. So when you look at this SPY chart right now, if you can block out all the bullshit that's being spit at you every day, if you can just quiet that down for a minute and just look at the chart, this thing is sitting right here at resistance. And it's been spending more time at the upper range of this channel than it is the lower range. Every time it gets a whiff of a sell-off, it just gets scooped right back up. It never lasts longer than a day. And to me, in order to prove there's going to be some sort of a correction, you're going to have to sell off and stick that sell-off for a couple of days before I can think it's going to even hold. So where we stand right now, I mean, just technically speaking, this 323 we're moving into, this is where, if you want to call this, let's just call it, we'll just call it this last correction. This has got 5% or something like that here on the 8th of June, this gap down flush here. It's going to test this level right here. And if it breaks that, I mean, we're going to probably see a parabolic move in this spot. You're probably going to see this risk on, get flooded back into the market, and that's the way it goes. And we talked about this so many times before in market mutterings and stuff like this. When you look at the market and you start thinking like a trader thinks and how the behavior of other traders and investors are, a lot of people have cash on the sidelines still, waiting for some sort of a pullback, waiting for these things to come back down to where they want to buy them again. And the longer that you don't get that retracement, the less likely that it ever happens, because what's going to happen is the knee-jerk reaction to that is people are just going to get tired of waiting and chase it. I shouldn't use the word chase, but they're just going to buy into it because that pullback never comes. And I think that's kind of the market's motive right here, is not to give you that second entry on this rally. And it's going to be a hated rally, and it's going to be missed by a lot of people. But it looks here as it stands now, barring any unforeseen circumstances, the thing's just going to romp. I kind of expected too we'd see a little bit of fade after Netflix here with the Qs. I'm going to put the Qs up here real quick. No have it. I mean, these tech continues to lead. Nothing has changed in this market. We're going to have to see a few things happen here before I can kind of think about seeing anything less than buy the dip mentality. It's still in, and some of that volatility is starting to come out of the market here. So again, govern yourself accordingly here, but we're still really bullish, and it looks like this market's ready to make that range break. At some point, one of those levels will go, and we'll get a clearer definition, but it looks to me like we're going to probably see that this week. Now, as far as stocks here, we do have a couple of nice setups because some of these former bullish growth stocks that we really enjoyed trading have made some pullbacks over the last couple of days, which are much needed. So there are some individual stocks that have some good setups. We'll start out here with some of these I've mentioned so many times before, is Okta. So you got a nice pullback here at Okta. And if you kind of look at what this thing did back, I don't know what day this is right here, but if you look at this piece of the chart right here, you know, you got this parabolic move followed by a nice fade into support. Obviously, we talked about it before because I've highlighted this with lines, but then you get this re-ramp. I think you're seeing the same thing here where it is nestled down into a piece of support here, very similar, stair-stepping upwards like I talked about before. So you've got this little stair step, move higher, stair step. Looks like this thing's ready to move itself up here towards the 240s. Pretty simple read here. Doesn't mean it's going to be a simple trade or that's what's going to happen. As those who attended the checkmark webinar, you see you've got tons of intraday check marks on this thing where it's opening flushes here and then just re-rallying back to highs. So this looks like a good one. I would at least expect that this will probably be somewhere closer to 220 by the end of the week. Now, what kind of intraday trading setups we get out of that, I don't know. But that's what I'd be looking for here, is this 220 move to happen this week. And I'd like to trade that in and out of dips for day trades here. Maybe even swing trade. You could just buy it here with a stop at the lows. But mainly what I'm talking about here is day trades and looking for this thing to move to 220. Another one that has a similar setup here that I'm really interested in is in PayC. This was a great stock for us. Now, you got to also remember a lot of these stocks we're talking about do have earnings as we start to move our way through earnings season. I don't trade those on the day of earnings. So up until that point, it's still a valid idea for me, but I'm just kind of letting you guys know, just for personal preference, the day of earnings and through earnings, I just don't trade these. But another stock that was really strong has gone through some consolidation. Looks like it's building a really nice base down here at the 282s. I would think if you get a shorter term range break, just from the range break from about 3 or 4 days ago, let's say this roughly 297s, we're kind of stalled out right there on Friday. I think it'll at least trade up towards these moving averages, bare minimum, which is like 310. So you're talking about $10 worth of alpha there that could be captured throughout the week. I would expect, just like I said with Okta, barring any unforeseen circumstances in the tempo of this market, I would expect this to move closer to 310 and 325 here before the week is over. And you got some pretty good defined risk. You got some decent support down there in the 82. So any sort of dip, again, we talk about check marks. Here's more of them. Any sort of pullback that lands itself close into support like this one did here, where you're reaching this support and it's into the areas of this support the previous day, you can see how well those levels still get defended and the stock ends up finding its way higher before the day is over. So I like that one too. Another one I've talked about here, they're all going to have virtually the same pattern because I'm trying not to just sit here and trade things that are constantly at all-time highs. I like to see some of these that have at least pulled back, even though we haven't seen that generally in the market, but we have seen that in some individual stocks. I want to take a look at Team here because this is another one that looks really good. You can see it's laid down into its support. We've got like a quadruple bottom roughly here in the 165s. Now, this one has not participated as well as the others. You didn't get much of a bounce where you saw things like Okta and you saw PayC move up out of their ranges on Friday. You didn't get that out of Team. It's still laying down here. I think for this one, you're going to have to see a 175 to 176 move up in here that actually sticks. I think if you can do that, it will confirm that this consolidation that you're looking at right now is the lows, at least for the short term. And just like the rest of them, you're looking for your targets to be back to where it was recently, which was right here, 198.41. So you're talking a lot of money here, to $25, $30 of potential weekly rally premium. And I'm just really watching this close. As I see it now, I don't think it's ready. It definitely is. I don't think it is not ready. But keep an eye on it. You do have some defensible support right here. This is also a major area, as you can see, in past chart activity. So this is sort of a line in the sand. Now, for you people that like to short, I'd have to also lean on that side that if it happened to break that level, there could be a short trade here. I mean, I'm not going to rule that out. I'm mainly looking for it to hold that, as most stocks have, and trend its way back. But, hey, got to be prepared, right? So I like that one too. Now, for my longtime friends, you're going to like my next one. Yeah, you're going to like it. The king is back. Sorry. The King Baba. King Baba is back on my list. Boy, it's been a long time. It's been a long time since me and Baba had a good old hug. Yeah. Anyway, same thing here. I'm just, you can see the pattern of the daily charts that I'm looking at. I'm taking all these former runners, and anybody who's had a pullback that's close into support or pulled back into a level and starts to consolidate, and demonstrate support, I'm looking to buy it. Right here is Baba. Now, I don't like this one as much as I like the other setups here, and this thing's kind of gotten wacky over the last month, at least for me. But I'd be looking for this thing to try to make a move at least to 251. That's not very far from here. But what would really be important here would be a close above 252. If this thing can do that, then again, every target goes back to the highs here, which is 268. So I think it's worth it. Take a look at it. So to kind of review this, still bullish, until you show me something different. But I'm becoming more and more bullish here, at least for the short term, thinking at some point this consolidation that we're going through in the market's not going to stick. And I'm talking about the SPY. We already see this in the Qs that are rampant. But the SPY and the Dow has kind of slowed itself up. So let's pay attention to that. Want to look at these dips stronger. For those of you that need help with your trading, don't forget to come and visit us. Hope you like this edition of Market Mutterings. In the comments section, leave me the stocks that you're looking at. Let's trade well, these guys. Until next week, take care.